It is almost 11 a.m. in Singapore and Shanghai. Welcome to Bloomberg Markets Asia. I'm Haslinda Amin. Here are the top stories. Israel ignores international appeals for restraint, saying it's begun targeted ground raids in Lebanon, escalating the campaign against Hezbollah. Global supply chains bracing for impact from a looming strike of U.S. dock workers, threatening to disrupt commodity exports to China and other parts of the world. Meanwhile, markets digest comments from Fed Chair Powell, which were less dovish than earlier, suggesting he's in no hurry to lower rates. And we speak exclusively to the industry's minister for the Indian state of Tamil Nadu, playing a crucial role in supply chains for global brands such as Apple, Hyundai, as well as Ford. Well, it's pretty muted here in Asia on the back of markets like China, as well as South Korea and Hong Kong on holiday. Traders, though, mulling a couple of developments. Intensifying conflict in the Middle East. Israel, as we said, has begun targeted ground raids. Geopolitics, some say, remains a key risk for markets. Also, the Fed's next move in focus after Powell suggested he's in no hurry to cut rates again. He says the U.S. economy remains on solid footing. Take a look where we are in terms of the benchmark Asia-Pac index, currently flat. We have the dollar index also flat at this point in time. In terms of the benchmarks here in Asia, the STI down 0.2%, but we're seeing gains in the Nikkei at this point in time, up about 1.5%. Of course, it is the yen story. It is weakening, helping to prop up the exporters, tech in particular. In terms of how it's looking for the ASX 200 index, it is currently down about 0.8%. Of course, we have the Middle East front and center, pretty much impacting the sentiment in the market. Let's take a listen to what Fed Powell, Jerome Powell, has to say.
Looking forward, if the economy evolves broadly as expected, policy will move over time toward a more neutral stance. But we are not on any preset course. The risks are two-sided, and we will continue to make our decisions meeting by meeting.
Well, now it's not just the Fed that's front of mind for investors. A growing number of other risks are looming large as well, starting with the Middle East. And Israel says it has begun targeted ground raids in Lebanon, escalating a campaign to root out Hezbollah, despite international calls for restraint. For more, let's bring in Bloomberg Horizons Middle East and Africa anchor, Jumana Basachi. Jumana, we know that, we've been hearing of Israel sending troops on the ground for days, and now this confirmation that has happened. What's the latest?
Yeah, well, there had been speculation for weeks that a ground incursion was going to be imminent. And indeed, in the last 24 hours, the IDF put out a statement on X saying that they have started what they call a targeted ground raid in Lebanon. Its forces are striking targets, quote, located in villages close to the border that pose an immediate threat to Israeli communities in northern Israel. Now, Lebanese media in the last couple of hours have also reported that the IDF has struck the largest Palestinian refugee camp in one of the cities close to the southern border in Saida, and state media in Syria also saying that a number of points in Damascus also got struck, causing significant damage to property and killing 3 civilians. Now, worth noting that there hasn't been any fresh commentary from Hezbollah themselves, but yesterday afternoon we did hear from the deputy Secretary General Naim Qassem, who said that the group's forces are actually prepared to fight Israelis on the ground. We are ready if the Israelis decide to enter by land, is what he said yesterday. But the background to this, of course, is that Hezbollah as an organization have taken multiple blows over the last couple of weeks, starting with the explosions in the pagers and the walkie-talkies that critically injured many of their operatives, and then the killing of many of the senior commanders, including the actual Secretary General himself, Hassan Nasrallah, on Friday. So the group is in a moment of disarray, and from Israel's perspective, looking to perhaps capitalize on this moment of weakness in Hezbollah to restore security to the northern border. But putting it all together, it does certainly appear as though this ground attack has started, albeit what IDF are calling in a limited format.
It is a spiraling conflict. Let's bring in Bloomberg senior editor Bill Ferris, who's with us. Bill, I mean, it does seem like the U.S. is also taking action, sending thousands of troops to the ground to boost security.
That's right. The Pentagon's saying it will send thousands more forces. Some of that is in terms of new fighter jet squadrons that will go to the region. And some of it is forces that were due to rotate away from the Middle East, heading to the Pacific, that Secretary of Defense Lloyd Austin has now ordered them to remain in the region. So boosting the presence, partly to as a deterrence to Iran, partly to bolster Israel's defense, and also to be there in case there needs to be some kind of a mass evacuation of Americans and other citizens from Lebanon.
And Jumana, it's hard for a truce to happen in Lebanon, and in the meantime, the death toll also continues to rise.
Get to some form of a ceasefire on the border, but without much diplomatic success. Key here is you need both Israel and Hezbollah to agree to the terms. And I say Hezbollah here, I don't say the Lebanese government, because actually, if you rewind back to comments from the Lebanese Prime Minister, the caretaker Lebanese Prime Minister Najib Mikati yesterday, he did signal that the Lebanese government wants a ceasefire on the border. He did signal that Lebanon is ready to implement this so-called UN Resolution 1701, which would stipulate Hezbollah putting down their arms and retreating from the border. But at this point, it is unclear whether Hezbollah or whatever remains of Hezbollah leadership are willing to take up those terms as well. And in the absence of that, this is why we are seeing what we're seeing this morning, and that the start of this ground incursion. How long it's going to last for is a big question, but certainly there's a lot of concern from the international community about the number of the rising death toll in Lebanon, in addition to the number of internally displaced, which the Prime Minister has put at 1 million people now.
And yet, the calls for a ceasefire by Biden is pretty much unheeded, and Netanyahu continues to do whatever he wants to do. What's the takeaway from this?
Well, I think the takeaway is Benjamin Netanyahu probably sees this as a real window of opportunity to hit hard at Hezbollah after they unleashed those attacks, those explosions with the pagers and walkie-talkies, and killed much of the leadership of the group. I think they see this as a chance to push back Hezbollah forces from the border region. If you remember, what started this whole latest round of conflict was that October 7th attack by Hamas forces coming over the border into Israel. Israel, since that date, has looked very carefully at its northern border and worried about Hezbollah being able to undertake a similar kind of attack. So that's their focus now, pushing back. And I don't think they're gonna focus too hard on these U.S. calls for an immediate ceasefire.
And Jumana, what's Lebanon bracing for now?
Well, I think you have to think about, number one, the push for a ceasefire and the comments coming out of the Lebanese government. But as we were just talking about, it's unclear how much weight he's actually going to have within his own country, which is an interesting point in itself. But the other factor to think about is what Iran does in all of this. And it was also pretty notable yesterday that we had a spokesperson from the Iranian Foreign Ministry saying that they are not prepared to send military support in help of Hezbollah. And this was a bit of a surprise to many, and even within Hezbollah themselves, because for years the expectation was that Iran would come to the rescue of its most important asset in the Middle East, the crown jewel of this so-called axis of resistance. And the fact that so far Iran has pursued a somewhat hands-off approach and no inclination to get involved in a broader conflict is quite telling, perhaps, of how they're viewing the situation and the potential threat of this blowing out into a full-scale war. So yes, the best-case scenario right now for Lebanon is that a ceasefire is implemented, but it all boils down to the risk assessment from Israel and whether or not they deem this new war objective in the north to have been completed.
Thank you for those perspectives. Bloomberg Horizons Middle East and Africa anchor Joanna Batsachi in Dubai and senior editor Bill Ferris here with me in Singapore. Now, New York's governor says she fully expects a strike by dock workers to go ahead this Tuesday, halting operations at East and Gulf Coast trade gateways. Port employers say they have raised their wage offer, and the Biden administration says the best outcome would be a deal before midnight. Bloomberg's U.S. economy editor Laura Curtis joins us now. Laura, what's the likelihood of a deal before midnight?
Well, it's not looking too good now. We've got less than an hour to go till midnight on the East Coast. We did have a little bit of good news earlier this afternoon. It's kind of surprising. We heard that the board of directors of the U.S. Maritime Association, which represents the ocean carriers and the terminal operators, had been summoned again to the White House this afternoon, and later found out that their wage offer had been increased. Unfortunately, there's still no movement on what I think is potentially the biggest sticking point around automation. We also haven't heard from the union yet, so I think all in all, anything can happen. But it's not, we're down to the wire now.
We're down to the wire, but this was looming. It was kind of expected in a way. What might the impact be still?
Well, the first thing that consumers would notice is probably a shortage of imported fruit from places like Chile, Portugal, things that we want and are used to, but don't necessarily need. We make grow a lot of food in the United States as well. One thing we're keeping an eye on is the auto industry. The ports that will be affected see an incredible amount of auto parts and completed autos, imports and exports coming through them, and so a full shutdown would really, it might not take very long for factory operations to be affected in some pretty crucial states like Michigan, especially just a few weeks before the presidential election here.
A lot of ports actually learned to cope with supply chain disruptions during the pandemic. Any key takeaways from that may help this time round?
Absolutely. This is a different situation than the COVID supply chain crisis. Retailers were able to see this coming, and a lot of them brought in a tremendous amount of goods ahead of time. So, we like to say, don't worry about Christmas. A lot of the gifts and things that retailers would have been really worried about not having on the shelves in time for the busy holiday season are probably already in the country. But it depends on how long this goes on. If it's a few days or a week, no big deal. It goes on a little bit longer, and those reserves wear out. We've got it becomes a little bit more dire. So we have to see how long it takes.
Good to know that your Christmas present may not be impacted. U.S. economy editor Laura Curtis in Los Angeles. We thank you so much for that. Well, still to come. We'll get analysis on how these escalating global risks are playing out in havens like gold. UBS precious metal strategist Joni Tevis will be joining us next. And later this hour, a look at why Tamil Nadu is among the few Indian states seeing growth in foreign direct investment. We'll speak exclusively with the Regional Minister for Industries, TRB Raja. Keep it here with us. This is Bloomberg. Let's do a check on precious metals, gold in particular, on the back of the Fed. We heard, of course, from Jerome Powell saying that he is in no hurry to continue to cut rates. It all depends on where the economy is headed. But the economy, he says, is on solid ground. Gold futures at 26.56. Remember that the precious metal has rallied about 13% in the third quarter. Silver futures currently up by 0.3% gains for platinum and palladium. In terms of the commodity spot index, currently flat, well, tilting upwards about 0.1%. Let's discuss this and more with Joni Tevis, precious metal strategist at UBS Investment Bank. Joni, quite a surprise, really, that gold has hardly moved given developments in the Middle East.
So the impact of geopolitical uncertainty and risks on gold prices is not exactly straightforward. So ultimately, the way we look at it is that it adds to the list of reasons why investors would want to hold gold as part of the portfolio to diversify and as a hedge against sort of these types of uncertainties. But the immediate price reaction is not really straightforward.
Not straightforward. Why not? I mean, so what's the relationship like?
Ultimately, what matters for gold is really kind of the way we look at gold is that it's real rates that matter. Macro factors are ultimately what drives gold. So there is potential for sort of knee-jerk reactions when headlines come out, but ultimately the more sustainable impact on the gold price is really kind of the interest that investors would want to have gold as part of their portfolio.
How about the relationship with the U.S. election? A lot of people talk about the risks of the U.S. election that's coming up. How much of that has been priced in? How might it play out on, when it comes to gold prices?
I think for now, because there's so many moving parts in terms of what the election's outcome might mean for gold prices, I don't think there's a lot of positions specifically ahead of the U.S. elections. But ultimately, I think the way investors look at it is that it's more about the U.S. fiscal position and what the outcome would mean for that. And the expectation that the U.S. fiscal deficit is going to deteriorate regardless almost of who wins the elections is seen to be positive for gold over the medium to long term.
When you take a look at the COMEX net long positions, looking pretty stretched, you got to wonder what the near-term risks are for gold.
So there has been a pickup in positions in the short term, and I think that means that the market could see some consolidation for now. But actually, if you look back to historical data, we're still not at all-time highs, and broader market positioning, in our view, is still not stretched. So part of our bullish outlook on gold is really that we think investor positioning in gold is quite lean, and there's a lot of room for investors to build those allocations to gold.
You talk about positioning. It's been buy the dip. What's the mentality? What actually is driving that interest to buy gold?
So the desire to hold gold is really more from a diversification standpoint, and the buy the dip mentality has basically been sort of the theme for most of 2024. Gold moved very quickly at the beginning of the year, left a lot of investors sort of behind, and have been trying to catch up ever since. But the pullbacks in gold have been relatively shallow and brief, so that continues to be the case up to now, and I think that's why we've seen sharp moves higher in gold this year.
But how long can buy the dip continue to support gold?
So from a broader perspective, I think the macro backdrop is supportive for gold. The fact that real rates are coming down, the Fed is in easing mode. From a fundamental standpoint, we think physical demand is also quite resilient, even at higher gold prices. The official sector continues to add to gold reserves. And as I mentioned earlier, positioning, I think, allows for more allocations to gold to sort of be built up over time. So I think that continues to be the case. And the risk here is that because the market hasn't been providing a lot of pullbacks, that people will have to continue chasing the move higher.
Just one more question on gold. We talked about how gold allows traders to have a more diversified portfolio. Is there any indication whether they're holding more gold in their portfolio, whether it's 3 to 5%, or are you beginning to see traders holding more in their portfolio?
So what we track is gold net long positions on COMEX and gold ETFs as a ratio to global funds AUM or U.S. funds AUM. And that has ticked higher, but we're still well below the levels that we got to during the previous multi-year bull run in gold, which peaked in 2012, early 2013. And we're still lower than the levels that ratio got to during the pandemic. So that does give us a bit of comfort in our view that positioning is actually not overcrowded, even though gold has gotten a lot of attention this year and the market has rallied quite a lot.
So hold gold. How about the other precious metals? And how should we be looking at these precious metals, considering how, how much uncertainty there is in the market right now?
So silver, we think, has a good potential to really outperform gold in this environment where gold prices are rising and the Fed is easing policy. And also from a fundamental standpoint, we see the silver market to continue to be in deficit, so that does add a bit of support to silver prices as well. For the rest of the precious metals, platinum and palladium, we think it's more fundamental rather than kind of more macro. So, we do see deficits in the platinum market, for instance, where we think this will drive prices higher over the medium to long term. But this move will be quite gradual in our view because there's still a lot of inventories of platinum that the market needs to digest. As far as palladium is concerned, we think that it's not a clear directional trend. We think that the palladium price will trade within a broad range over the next few years. We see deficits in palladium as well over the next few years, but over the long run, our expectation is that the market does move into a surplus because of competition from battery electric vehicles.
Okay, so we can't let you go without asking you for target prices for year-end for these precious metals, in particular silver, since you say that silver is likely to outperform gold.
So for 2024, our year-end target for silver is $36. We see it rallying further next year to $40.
Okay. Joni, thank you so much for that. Joni Tevez, UBS Investment Bank. Plenty more ahead. Keep it here with us. This is Bloomberg. Asian markets looking for direction with China, Hong Kong and Korea on holiday, currently flat at 194.99, and we're talking about the MSCI Asia Pac Index. Of course, investors mulling several developments, among them intensifying conflict in the Middle East, and don't forget the Fed. Chair Jerome Powell says he is in no hurry to cut rates, but the U.S. economy is on solid footing. Meantime, here are some of the top corporate stories we are following. Tech-focused publication The Information reports that SoftBank's Vision Fund is planning to invest $500 million in OpenAI. This is part of a larger funding round that would cement OpenAI's place as one of the world's most valuable startups. Bloomberg previously reported that OpenAI is in talks to raise $6.5 billion from investors at a valuation of $150 billion. Qatar Airways plans to take a 25% stake in Australia's Virgin Airlines. The Gulf carrier plans to acquire the minority stake from Virgin Australia owner Bain Capital once regulators give approval. Australia's government last year denied Qatar's bid for more flights into Sydney. Virgin is trying to challenge Australia's dominant market player, Qantas. And satellite providers DirecTV and Dish have agreed to merge in a deal that will create the biggest pay TV provider in the U.S. DirecTV will acquire Dish TV and Sling TV from EchoStar for just $1, but will also take on nearly $10 billion of debt. In connection with the deal, TPG will acquire the 70% stake in DirecTV that it doesn't already hold from AT&T for nearly $8 billion in cash. The Wall Street Journal is reporting that PepsiCo is in advanced talks to buy tortilla chip maker Siete Foods for over $1 billion. The report says a deal could be announced soon. Siete, which is privately held, is known for its Mexican-inspired products, including tortilla chips. Let's get back to the markets and see how it is shaping up for Asian stocks. Pretty lackluster at this point in time. Take a look where we are in terms of the FX space. Asian currencies under pressure. We have the yen currently down by 0.4%. It is providing that relief for exporters. Tech in particular, seeing a jump in today's trade. In terms of how it's looking for the benchmarks in the city, in the region rather, the Nikkei 25 is up by about 1.5%. Gains too for the JCI as well as the SET. Well, still to come, Tamil Nadu's Minister for Industries, TRB Raja, joins us exclusively to discuss growing FDI in the state. This is Bloomberg. Welcome back. Let's take a look at how it's shaping up here in Asia. It is Tuesday and it feels like I can't wait for the weekend to come. Well, it is pretty flat in terms of the Asia-Pac index, the MSCI Asia-Pac index looking for direction on the back of Hong Kong, China, as well as Korea on holiday. There you have it. S&P futures pretty unchanged at this point in time. Of course, on the back of that, we had the Fed coming out to say that it is not in a hurry to cut rates further. The U.S. economy is on solid footing. Take a look where we are in terms of the benchmark in Thailand, currently up about 0.6%. Gains for the benchmark in New Zealand, currently up by 0.3%. Staying with markets, Morgan Stanley's chief U.S. equity strategist says the labor market will be a bigger driver of stocks than interest rates. Michael Wilson told us more about how he's evaluating the current news cycle.
Good news is good news until it's not, because then the Fed has to raise rates too much. That was the story before. Now it's bad news is good until it's too bad. So look, I think there's three parts to what happened in the last 2 weeks. Okay, first of all, the Fed gave us 50. I think everybody was kind of expecting 25 right up until the last minute, and so it was still an upside surprise. Now we had written about this. We thought 50 going into the meeting, if they could convey that it was not being done for growth concern reasons, would be a positive. So we got that, checked the box. And I don't think that was a shocker, but it was a positive event. And then we got the China stimulus. But that came in two pieces. Don't forget, right? It came with a monetary stimulus initially. And I would say most people, including us, were like, well, that's interesting, but that's not going to do much. We need fiscal stimulus. They're in deflation, right? We're not going to get any action in the real economy. So then, of course, the policymakers came in because they listened. And they said, OK, we'll do some fiscal, too. And then we got this massive move. So we've had a 20% plus move in 3 days, which I would say very few people captured. All right. The other thing you have to think about, why is it up so much today? Well, Japan sold off sharply over the weekend. So I think, China has been a source of funds for the Japan trade, for the India trade, all the other EM countries that have done well. Okay, and now you may see some reversion back. But that feels pretty overcooked to me at this moment. What we care about in the U.S. is the following. Is this going to change the trajectory of growth in the U.S. in a meaningful way? And the answer really is no. It can maybe get some excitement in things like materials, some of the industrial stocks who have direct leverage to perhaps a China stimulus of some kind. But beyond that, I think we need to see the labor market get better in the U.S., and we need to see the policy changes from the Fed have an impact on consumers.
Let's talk more about the labor market, because clearly a lot of investors are hinging on Friday's report. How much could that move the needle? And if you have a significant miss to the downside, what would that mean for equities? I
mean, for us, the labor market's everything now. And by the way, it's everything for the Fed.
Yeah.
So, this is the $64 trillion question. Did the Fed cut 50 because they are actually worried about the labor trends, which I think they should be paying attention to that? Or are they doing it because, look, inflation's come down and they're too tight to begin with, and so that they're able to, is the Fed cutting because they can or because they need to? So the labor market will tell us the answer to that. And we've been pretty straightforward about this. If the unemployment rate goes up again, I think that's a clear negative. If the unemployment rate can come down and jobs data is okay without any major revisions, that would be a positive.
The labor market is key. Keep a lookout for that data coming out on Friday. Morgan Stanley's chief U.S. equity strategist Mike Wilson speaking with our colleague Sonali Basak there. Plenty more ahead. Keep it here with us. This is Bloomberg. Well, Indian stocks have been under pressure for 2 straight sessions. It's shaping up to be a pretty flat open for Indian stocks today. Nifty futures pointing to just a slightly higher open of 0.1%. Keep a watch on the Indian rupee. 83.81 is what we're looking at. Pretty flat versus the USD, even though most Asian currencies are having an up day today. Well, business booming in the South Indian state of Tamil Nadu. In recent days, companies including Tata Motors and Cisco have moved to expand their manufacturing capacity there. For more, let's bring in Bloomberg senior editor Manika Doshi. Manika, what are we seeing? What are we hearing?
As you'll recall, when you were in India just a few months ago for the elections, that Tamil Nadu was in the news, as a state that is consistently ranked the highest amongst India's socio-economic indicators and drawn in industry from across the country and outside, and also rebuffed the majoritarian politics of the BJP. Now, as you pointed out, the state is back in the news over the last several weeks for the variety of investments that it has managed to corner, whether it is Apple manufacturers like Foxconn and Tata, to Cisco routers. That announcement came in last week. And JLR, that intends to produce cars in Tamil Nadu. Again, that happened this weekend. Now, on a recent trip to the U.S., the state's chief minister bagged preliminary investment commitments of close to $1 billion. And the marquee one in that was the return of Ford, the American automaker that left India in 2021 after it failed to make a dent in the domestic market and now intends to return to its plant in Tamil Nadu and make that a base for exporting cars worldwide. We're joined this morning by the Industries Minister of the state, T.R.B. Raja. Minister Raja, thank you very much for joining us. Let me start by asking you about what magic words you whispered in the ear of Ford management to get them to return.
Oh, we just spoke about the amazing initiatives of the Chief Minister over the past 3 years, and then the kind of DEI steps that we have taken in Tamil Nadu, and how Tamil Nadu is the front runner when it comes to manufacturing in India, how Tamil Nadu is the engine that's powering India's growth story today. We spoke about how 43% of all the women working in India are from Tamil Nadu in the organized sector. And these are numbers that any investor would love. We spoke about how we are leaders. 57% of our energy is green. We spoke about how our infrastructure is robust. Tamil Nadu being the most
Minister
urbanized
Raja,
state.
forgive me for interrupting you.
Yes.
Forgive me for interrupting you, but did you offer any specific incentives to Ford to return? Because they didn't have, a very good experience in terms of their own domestic market exploitation in the past years. Now they want to make it an export base. What more can you tell us about the timeline, what they intend to use there, when they hope to start?
Yeah, incentives is something which we really won't discuss on a live platform, but that's something which when Tamil Nadu promises something, it delivers, and that's what is more important for any investor. So the kind of incentives that we have spoken about, we will be going into details even further, going through the next few months. They are yet to decide on the kind of manufacturing and the type of manufacturing that they're going to do here. So once they come back to us, we'll be going into details about that. Yeah, and more than anything else, the talent pool that's here, that's what is attractive for Ford.
Allow me to press a little further, not just on the incentives for Ford, but what Tamil Nadu has on offer, because several states in India are rolling out the red carpet for investors, both local and foreign. What is it that you're doing differently to get this variety from Cisco to JLR to Ford?
We're talking about our strengths. We've just straight talking about our strengths. The kind of talent pool that's available, the kind of engineers. We roll about 150,000 engineers every year, and we skill them to the requirement of the investor. We have an amazing scheme called the Non-Mudalman scheme, which is one of the biggest upskilling scheme in the country. And that's working fabulously well with the investor, with the manufacturing fraternity. They come to us, they tell us exactly what kind of talent they need, and the output that's delivered from that talent, it's global standards. And that's why today, from Michelin to Saint-Gobain or any of these other massive industries that are here, they compare manufacturing in Tamil Nadu to global scales. So, yeah, there you have it.
Minister, you talked about how Ford has yet to decide on what it will manufacture in its plant in Chennai. I'm just wondering, would it make sense for Ford to actually manufacture EVs, given India's own EV push? And might it manufacture EVs for not just domestic, but international market?
Well, if you go with the trend and what you see, the kind of investments that have come into Tamil Nadu over the past few years, like Tata Motors have brought their EV line also coming into Tamil Nadu. We just opened that factory. We just broke ground 2 days back. VinFast is already here, and as an auto capital of India, as the electronics capital of India, and as of now, the EV capital of India, Tamil Nadu produces about 40% of all the EVs sold in India. We produce about 70% of all the two-wheelers sold in India. So they do know that the EV ecosystem is ripe. And I can tell you that, the discussions are also on those lines.
Minister Raja, when it comes to one of India's biggest, newest focuses, that's the semiconductor area, Gujarat seems to have taken the lead. What are you doing to be able to close that gap? Are you building out a semiconductor ecosystem of your own in the state? And not just semiconductors. What is your focus here on for new investments, local or foreign? Will it be industry-specific or district development-specific? If you can talk us through the future strategy.
But Tamil Nadu is all about distributed growth, and the Honorable Chief Minister through M.K. Stalin has always been talking about distributed growth across the state. So yes, every district has its own strength, and we will be playing to that, yes. About the semiconductors, we already are going towards design, we're going towards compound semiconductors. We lots of discussions on that space, and you will hear something very, very good very, very soon. And our focus would be on the design side and compound semiconductors. I would also love to have life sciences into my kitty. That's something which we're really, really going after for quite some time now. We want to increase our life sciences portfolio. R&D is our strength. We're playing to our strength. We have the highest number of PhDs in India. We have the highest number of patents registered last year. So yes, we are playing to our knowledge economy strengths.
I must also ask you, Minister, about the Samsung strike. Close to 1,500 workers in that plant in Tamil Nadu have been striking work for almost a month now. How do you view this demand for higher wages, which is excellent from an employee welfare point of view? But what's also happening with many other investors in Tamil Nadu is they do feel that labor costs have gone up considerably, and they're now looking at several northern states to be able to expand their operations in.
I'll keep it brief on that one because Samsung, on its side, from its side, is ready to give whatever the demand is, whatever the right demand is, and they are more than willing to give the kind of increased wages that they're asking. It's a discussion that's going on. There is a bit of a glitch from both sides. We've been in talks with both sides. It should be very, very soon. Most of them are returning. And they've started to understand that Samsung itself is willing to talk, and they're very open to talking to their employees. The key word is their employees.
I have one last question for you, Minister. I understand that. I have one last question for you, Minister, and that is, what can we expect in the next few years from Tamil Nadu in terms of policy, in terms of incentives? Because investors probably come to you with a list of demands, and I'd also like to know what their perspective is about investing in India. How much have we been able to capitalize on the China Plus One opportunity?
Actually, China Plus One is what is driving India today, in my view, and especially for Tamil Nadu. That's a great growth story. If you look at going ahead, we would love to have something on the RE space. Also, offshore wind is taking off big time, and there's loads of interest from investors abroad. Investors have also seen the quality of output coming out of India now. That was a bit of an iffy thing before, but now they do see that the quality that's coming out of India in many ways is much better than China. Also, some of the Japanese customers that we have, some of the Japanese investors that we have, send their teams here to Chennai to look at the high parts per billion that we hit when in our manufacturing. So the quality of manufacturing in India, that I think is key. We are thinking globally, and we are also acting globally. We are also producing to global standards, and that is what is key, I think.
Right. So taking a global perspective, you've already attracted Ford, VinFast, any other auto companies that you are actively pursuing to encourage them to come to Tamil Nadu?
Well, I think any auto investor who's coming into India today would first step into Tamil Nadu because of our strength as the auto capital of India. We have the ecosystem in place. Yes, we are talking to a few, but I think, you do know there's a huge bit of competition, especially between 2-3 states. So we would like to keep our cards close to our hearts.
One final question. What's the biggest risk in doing business, not just in Tamil Nadu, but in India? There's been so much optimism. We talk about in the markets, for instance, how valuations have escalated. What's the biggest risk you think in doing business in India right now?
Personally, I don't see any risk at all when it comes to, especially when you're manufacturing in Tamil Nadu. The global business scenario is shifting, and India is an undeniable force. And I don't think any risk is big to deny entry into India. So I'm thinking, no, there is no risk into stepping into India for sure, especially Tamil Nadu.
All right. The time is now for Tamil Nadu. Thank you, Maneka, as well as Minister for Industries, TRB Raja, Government of Tamil Nadu. India's been trading for about 1 minute now. Let's do a check on how it's shaping up for the Indian market. Of course, we've seen losses of the last two trading sessions today. It is poised for some gains, it seems. The Sensex index up 0.3%. Nifty also in positive territory. In terms of the currency, little change. It's pretty muted versus the USD. We're looking at 83.81 currently. Well, still to come, we'll take a deeper dive into the outlook for markets with the fourth quarter now underway and China's stimulus providing a lift. Keep it here with us. This is Bloomberg.
At the same time, the road ahead will not be smooth. There will definitely be difficulties and obstacles, and we may encounter major tests such as high winds, rough seas, or even stormy waves. No difficulties can stop the Chinese people from moving forward.
Chinese President Xi Jinping in his first public comment since Beijing launched its unprecedented stimulus package. For more, let's bring in our China correspondent, Min Lo in Hong Kong. Min, it reminds me of when Xi Jinping talked about that 100-year storm.
Yeah, well, he's taking quite a somber tone here in this National Day reception speech at the Great Hall of the People in Beijing. Typically, the tone will be quite upbeat, talking about, what a glorious future China will have, which he did mention, but he also added a little warning this time about potential roadblocks ahead and having to prepare for rainy days. And that's quite a departure from his 2019 speech at the 70th anniversary of the founding of the Republic of the PRC, where he talked about all the major achievements that China has done in terms of socio-economic achievements and how China's future is going to be very bright, undoubtedly. And this time, it really points to some of the geopolitical headwinds that has been brewing, right, with the U.S. elections coming, a very tight race there that could maybe flip that risk-on sentiment to a risk-off one if, say, Trump comes into power. And also some of those economic woes that have been going on for some time. We had that huge rally as we head into this Golden Week holiday, and some analysts say that maybe President Xi is also trying to temper expectations there, because although we can see this sentiment-driven rally really quickly in the stock market, but when it comes to the fundamental shifts in the economy, that's still going to take months or if not years to really materialize.
And speaking of the rally, Min, we saw how property developers in particular had quite a surge. And now Beijing, among the Tier 1 cities, easing home buying rules.
Yes, so Beijing is now allowing non-residents to buy homes in some of its central residential districts as long as they pay 3 years of income tax or social security, down from the previous requirement of 5 years. It's also lowering the down payment ratios for first and second home purchases to 15% and 20% respectively. So following very swiftly in the footsteps of the other Tier 1 cities, as you said, Shanghai, Shenzhen and Guangzhou, to relax some of these home buying curbs. After the PBOC just over the weekend announcing that mortgage homeowners can now refinance their mortgages as soon as November. And that's also after the Politburo on Thursday last week saying that they will put a floor to stop the decline in the property sector. So we saw all that optimism filtering through to the real estate developer stocks, which is up some 15% yesterday based on the Bloomberg index that tracks those stocks. But some analysts are saying that, yes, we'll get a pick up in buying activity in October, but more measures still need to come in given just how deep the slump that we have seen so far.
That's right. They need to follow through with more action. Bloomberg's China correspondent Min Lo, thank you. Now, Asian markets heading into the fourth quarter on a high note thanks to Beijing's stimulus bonanza. Let's discuss where markets go from here with Bloomberg M Live strategist Mary Nicola. Mary, it does seem like China is falling through, but markets want more. We've had this before, but enough for now.
Yeah, you know, we've had an unbelievable rally, is the best way to put it, in the past week. We've broken records. There's so many superlatives that we've seen. And I think, obviously, we're going to need the data to follow through. But essentially what they've done in terms of the coordination on the monetary and the fiscal side is they have put a floor under sentiment. So they've put a floor under equities. That stabilization fund was absolutely critical in terms of putting a floor on sentiment and boosting the market towards for going into equities. So it will take time to filter through a lot of the data. Let's say for September, we're not going to really look, we're going to look past, but it's going to come down to the October and November data and what we see through Q4.
The thing is, we may have put a floor in China, but when you take a look elsewhere in the world, there seems to be rising geopolitical tensions. The Middle East case in point. Might investors be kicking off Q4 too optimistic and perhaps not pricing enough the risks?
So there's always geopolitical tensions lingering, right? In terms of we've been dealing with the Middle East, we've been dealing with Russia, Ukraine for quite some time. I think what investors are really focused on is what is the overall broader environment and the overall broader sentiment. And that is really that you have global growth on a very steady path and a strong path, but then at the same time you also have the Fed easing, and that's absolutely critical. Now then you get to add on what's coming in from China. So you've got this trifecta essentially of support for global equities that are actually really, really hard to ignore.
So what do you do with your portfolio? I mean, what are you hearing? What are investors doing to protect themselves?
Yeah, so of course there's going to be some, obviously we could argue that they're overexcited about Fed easing. I think that was very clear yesterday with the market reaction. So of course you're going to have, you know, especially if we get a downturn or some sort of negative reaction, let's say from something like the elections, that's one risk that is still coming through. So, you know, things like the dollar are still a robust one. Gold is still doing very, very well. And that's another one that you can play as a haven. So you still have some havens out there that will support you in a market downturn. And we've seen that over the past year. It's not like previous years where everything just moves together. There has been a little bit of a bias where you don't see everything moving together, and that's actually a good thing.
That's right. And gold, they say buy the dip, and that's the trend we've been seeing throughout the year. Mary, thank you so much for that. Bloomberg MLive strategist Mary Nicola. In the broader market, this is how it's shaping up to be a pretty muted, pretty quiet day for Asian markets. Take a look at where we are in terms of the MSCI Asia Pac Index. Pretty flat gains for the SCT, for the benchmark in the Philippines as well. Remember that it's pretty muted as well because China, Korea, as well as Hong Kong are on holiday. MSCI Asia Pac Index up 0.2%. In terms of the FX space, we have Asian currencies under some pressure there. We have the Taiwan dollar, ringgit, as well as rupiah, which have been outperformers this year under pressure right now. That is it from Bloomberg Markets Asia. Horizons Middle East and Africa is next. Keep it here with us. This is Bloomberg.